Hey, it's Jonathan. Thanks for joining me today. I hope this video finds you in good fortune. Today I want to continue our series on fundamental analysis, our economic indicators. We're going to add this to the series. I'll link the playlist if you want to watch all the other ones at the end of this video. Today we are talking about the JOLTS Job Report, and I'm going to kind of evaluate it from both perspectives. Depending on where we're at in the market cycle is going to determine how we interpret this report. So let's look at the market cycle first. This is our website and a little learning section down here at the bottom that we've created. I make this content to basically refer to myself. This is content that I compile that helps me determine where we're at in the market, and I have it available for you. But under our learning section, we see our market cycle here. This is a little diagram. This is our boom and bust cycle. Gives a little bit of explanation. You'll also find links to the fundamental different material that we use in our video for the fundamental analysis, and also the videos themselves on this page as we slowly add to it. So the JOLTS report is it determines where we are on this in this market cycle, how we're going to interpret this. If we go over to Forex Factory, which is a calendar I use for to keep up to date with the economic reports coming out, you'll see we have JOLTS jobs openings here. We can click on this little file icon, and you'll see that the JOLTS jobs report is a number of job openings during a reported month, excluding the farming industry. So this is all the jobs, all the job opens in America, excluding farming industry. Okay, and on this it says usual effect, right? Usual effect is actual greater than forecast is good for the currency. So now this actually depends on where we are in the market cycle. Okay, and now FedPal has stated a number of times that one of the leading indicators he's looking at to determine whether inflation is coming down is if we have higher unemployment. The higher unemployment means that there's going to be less money in the system. The more people that are unemployed, they don't have money to spend, so there's less money in the system, therefore less people buying goods and inflation coming down. So the job openings, that would also mean that we would want to see less job openings, because then there would be less opportunities for people for employment to make money to put in the system to cause inflation. Okay, so if we are back to our website here, if we're around here where we've just come out of a depression or a recession, and stocks and bonds are just starting to go up, then a high number of job openings would indicate that maybe more people were going to be put back into the workforce, therefore more money and liquidity, and that would be a boom for the economy. This would be interpreted as being good. But since we're in a situation where where the Fed is trying to fight inflation, more jobs is not necessarily good. This could indicate a number of things, that people are still spending, still chasing goods, and creating inflation, and people need to hire more employees to keep up with demands, and then those employees would also put more money in the system, increasing deflation. So if we're in an inflationary environment, more jobs are not necessarily a good indication. Now that's how we need to interpret this data through what the Fed has said that their outlook is, and the indications that they're going to use, whether the inflation and the unemployment has been clearly stated by Chairman Powell that he's using the unemployment as one of the indicators. Okay. So if back over here on Forex Factory, you can see the latest releases here of the report, and if we click on the latest release, you will see that The JOLTS actually stands for Job Opening and Labor Turnover Survey. So this is a survey of the job openings for America. This gives you a breakdown of exactly what industries have jobs openings. Now, one thing is to note is we have a manufacturing category here. If we start to see job openings increase in the manufacturing sector, this could actually be a good sign even in an inflationary environment. This could be a good sign in either environment because the more manufacturing that's going on, the more products being put on in the market, and therefore increase in the product in the market may bring down inflation. So that's something to consider, and this would be something that we would be looking for when evaluating the actual breakdown of jobs that are available. So if we see a great increase in the manufacturing, then that may be something that's disinflationary. I'll let you read through this. There's lots of good information here. I don't want to make the video too long, but this is where you can find it again on Forex Factory, and that would be their latest releases right here. So we see the last number. The expectation was 9.7 75 jobs, 9.75 jobs open, million jobs open, and we ended up with a 10.72. So this is higher than anticipated, and so that means that people are hiring because they need more employees. I would interpret this as a negative for the economy because more job openings, again, is going to create more inflation. And we can look at the chart from clicking the little chart indicator here. This will take us all the way back to 2004 or so. You can see that we have quite a number of job openings. We have a higher than we've had for years. Um, so, and this looks like a good formula for inflation. For me, you see these grayed out areas. Now this is on the Fed website. These gray areas, we can evaluate the same data on the Fed website. These gray areas right here are recessions, and during recessions you'll see that the job numbers come down, and we've already started seeing a decrease in those job numbers, although we are still quite high on the spectrum of job openings. So anyway, well, this is just a report that you want to take a look at, especially since the Fed is using the unemployment figures as an indication. These are very important reports to take a look at to evaluate what's going to happen in the market. Look, make sure thanks for joining me for this video. Make sure you give me a like, subscribe, and thank you for watching the video to the end. Share the video. Check out our blockchain friends, Magic Square NFT and Art by Annora. And that's about it. Y'all are beautiful. I will see you next time.